In a business combination, the consideration that is transferred by the acquirer to the acquiree is measured at fair value on the acquisition date. Now, the consideration that is transferred can consist of more than one form of consideration. I've listed here some of the possibilities. So it can be a cash payment, can be physical assets that are transferred to the company that's being acquired, can be as a result of liabilities that is raised. It can also involve shares that are issued by the acquiring company, and there can also be a component of contingent considerations. I just briefly want to touch on the different types of considerations that can be transferred. The easiest one is the cash. Now, because the consideration that is transferred needs to be valued at fair value, the fair value of a straight cash payment is just the actual cash flow that took place. So it can be the actual cash flow on acquisition date. But in some cases, there can also be a deferred payment, in which case you would be required to calculate the fair value of that payment. The fair value being the present value of the deferred payments discounted back at the company's internal borrowing rate. That basically will give you an amount that the company would need to borrow if they had to settle that future payment immediately today. So we calculate the present value of the deferred payments at the company's internal borrowing rate. Second form of consideration is non-monetary assets, or the physical assets. And basically what that entails is if you transfer physical assets to the company that's being acquired, you're in effect selling that asset to the acquiree, and you have to record that sales transaction at fair value. So the first step, if we've got physical assets, would be to revalue the asset currently in our financial records. We have to revalue that asset to fair value, because it will most probably be stated at cost. And then we have to recognize a gain or loss on that transaction, and that will go to the income statement of the acquirer. Okay, then we can also have a situation where liabilities are undertaken by the acquirer, and that's best measured by just calculating once again the present value of the expected future cash flows. So just a fair value calculation that we need to do. Okay, if we issue shares to the acquiree, so the company that's being acquired will then own shares in the company that's acquiring them. Those shares need to be valued at fair value. If it's a listed company, of course, we just look at the market rate on the acquisition date. If it's not a listed company, some form of calculation will be required to calculate the shares' fair value on acquisition date. What you need to keep in mind with shares are that if we incur, and it should be the case if we've got a share issue, any share issue costs, you need to make sure that you know the treatment of the share issue costs. And what we do is we set it off against our share capital, because it in effect reduces the proceeds from the share issue. Contingent considerations are the last form of possible consideration that can be transferred that I'm going to consider. Now, if you look at the definition of a contingent consideration in the accounting standards, you'll see that it's basically just a provision that the acquirer will transfer additional assets or shares to the owners of the company that was acquired if at a future date certain specified events did not occur or conditions were not met. If there are arrangements regarding contingent considerations, it will require that a calculation is made at acquisition date to get some form of fair value that we can attach to that future payments that might need to be made. The purpose is then to value each of the forms of considerations at fair value at acquisition date to get us the total consideration that was paid for this business acquisition. And the reason we need that is to compare it to the fair value of the net assets that has been acquired in order to see whether there's goodwill resulting from this business combination that needs to be recorded. Whether that's the case or whether there's a gain on a bargain purchase. Well, I trust this will clarify just the different forms of consideration that can be transferred. If you need any further explanation, please post a question on MyGuru. We'll be able to give you further feedback.